Hi, Michael Stokes here at the Financial Coaching Group. I'm here with CEO and Abundance President Mark Matson of Matson Money as well. We're actually in Cincinnati, Ohio, and I thought I'd sit down for a few minutes with Mark and just discuss some of the things that give clients most their concern. And so I thought I'd ask you a couple questions.
Sounds great.
As well. Clients, I obviously have great concerns about the market and what's going on today. And Mark, what's some of the major things that happen, major concerns that clients do have, especially in these troubled times right now?
Yeah, I think that's a great question. As a matter of fact, next week I'm going to be headed to New York City. We're going to be talking to Liz Clayman. We're going to be on Fox News. And normally when I go on those shows, they ask things like two things. One is, what stock should you be in right now? And then they want to know which way is the market going. And I think that's primarily what's on investors' minds right now. We went through a terrible period last year. The market was down tremendously. A lot of investors panicked. And when they panicked, they got out very near the bottom of a market. No one really expected the market to go up the way it has. As a matter of fact, March 9th was the worst period. It was the down period now. The U.S. market and international markets are up huge so far this year. So investors, many investors are thinking, wow, I messed up. I panicked when it went down. Now it's going up. When is the right time to get back in? And there's still a lot of financial anxiety around the markets. The key to all this, to have a successful investment experience, is to stop trying to predict the market. And that's what I always have to tell. That's what I always have to tell people on the news, is that the goal is to look at long-term the rates of returns of equities in your portfolio, and you want to pick a mix of assets, understanding exactly how volatile they're going to be. Include some fixed income for most investors in your portfolio, and then as the markets are volatile, rebalance. Last year was a primary example. When everybody else was panicking and selling, we were rebalancing the portfolio, selling the fixed income, buying when things were down, and right now that they've been up, just rebalancing a little bit, selling the excess equities, and then rebalancing the portfolio. So stop trying to predict. Stop worrying about it. Pick a portfolio that you can live with for the next 20 years and be able to avoid the panic of the up or down markets.
Excellent, excellent. I get the question a lot is, Mike, what is it that you do? And compared to what is it that my broker does? Mark coaches 300 plus advisors around the nation on the proper allocation, the proper structure, and the proper prudent investing and so forth. If you were to answer that question, what's the difference between what a normal broker does and what you're teaching advisors like myself, what we do to help our clients?
Yeah. We talk about a concept called coaching. And coaching, we've developed 20 must-answer questions that every investor has to know, preferably before they build a portfolio and not after they build a portfolio. What most so-called brokers or financial planners do is the exact opposite. They put a person in a strategy, normally focused around track record performance in mutual funds, 5-star mutual funds. They try to build an allocation. So what they're really doing is they're predicting and forecasting and simply trying to manage money. We don't do that here. What we do is we help investors understand exactly how, and every investor is different. Every investor has a different risk preference. They have a different goal time horizons for their portfolios. And we teach investors how to actually understand how their portfolios are developed so that they can make better decisions. Another thing that we do in part of the coaching process is help people deal with their own behavior. For example, everybody knows how to lose weight or get in shape. You eat less and you move more. But it's the implementation of those behaviors over long periods of time which become problematic. Every investor knows theoretically how to make a lot of money. You invest in equities, you diversify, and then you rebalance your portfolio, buying when things are relatively low and selling when they're relatively high. But almost nobody can do that. Just like staying on a diet and consistently working out, actually implementing that is very key. So we help people have a catharsis, come to the realization that human behavior, no matter how great you build a portfolio, ultimately it comes back to the human behavior to stay disciplined over a lifetime. That takes coaching. Because I can tell you, as you mentioned, coaching hundreds and hundreds and hundreds of advisors, most of the advisor community out there, they're part of the problem and not part of the solution. They're just as volatile and make behavior mistakes just as easy as investors do.